All right, traders, welcome to today's recap. This is Christian from Tribeca Trade Group, and today is Tuesday. We got 2 days to go before Thanksgiving, so today is the 20th, and well, let's start with the let's start with the positive today. A couple names reported earnings after the close, a little bit different than what we saw in retail this morning. Holy cow! Every name well, almost every name in retail got shelled this morning. And that was one of your worst performing sectors. Again, I'll look at that chart in a second. XRT is the retail, but you can see Foot Locker's up pretty nicely here. They had good numbers. They're up $5, and then next, I guess we'll stick with retail. Gap also had numbers. They were kind of I see their guidance is not that great, so they're kind of just hanging out at flat. Autodesk. Looks like it's probably the star of the aftermarket session. They're up to 133, so they're up 11 bucks from the close, and that's basically gets you back to Monday's open. Keys is another name in this space. I believe it's another application software name, up nicely. There was some calls that were bought today in Keys. I tend to kind of ignore the option activity same day because I think it can be very misleading. But just to give you a look to see what they did here in Keys, you could see it did look like there was 4,500 of the December 55 calls that were bought today. There was also some puts that went up aggressively too, but they were smaller quantity. This was a $1.2 million trade. I did not look to see if it was against stock, to be honest, because like I said, I normally just ignore that kind of stuff. So it could have been a stock replacement, considering it was what, 45 strike, did I say, which was basically in the money. So probably what they did there. But so this is up today, but I kind of shake my head a little bit because, well, maybe not shake my head is the right thing, because if you look at what Intuit did when we left here yesterday, Intuit was doing the same thing. Intuit went up to 214 last night, and then just completely dribbled all the way and gave it all the way back and finished lower on the day. So I don't, what else can you really do but kind of laugh at this stuff? If you are trading names for options, right? This is a big point to make. It's normally what I do for options is I trade call spreads or put spreads, or I look to sell premium by selling put spreads or selling call spreads. When you do that, it's very difficult to kind of hedge after hours because you're capped in either direction. But if you're outright long calls, and I know in these names it's not easy to do because the implied volatility is high. The options are very expensive, but I'm kind of just been being very picky and choosy with options because of moves like this. It's really difficult in this market to hold the gains. So if you bought an outright call, again, which you really have to you got to risk a lot of money to do, but you could delta hedge after hours. If you're in a call spread, you can't really do that, so you're kind of stuck. So I did not play this one yesterday and Intuit, but it's just a good example of what this market is doing right now. It's very difficult because you could look, and it's even more like hurts the morale even more because you step away from the screens for the night and you're like, hey, I did a great job. I got a long, maybe I did the 204 or 205, 210 call spread and Intuit, and it's up to 214. Awesome, great. Then you come in the next day and you can't get out of it and you end up losing. So that's even worse sometimes when the stock just goes straight down because you think you had a big winner and you end up getting nothing. So again, it's a good learning lesson here. It's really difficult to play options for earnings unless you're doing one of that type of strategy. And I think right now, it's not a strategy that is really going to. It's harder to get it to pay off if you're doing that. And again, the reason why you do call spreads or put spread is to minimize that high implied volatility that you get right before the earnings event. So we'll see how this goes with these names. I mean, I remember also talking about looking at Pure Storage yesterday too, which was up in the after hours, and that gave it all back too. So, so that being said, let's look at what happened today. We'll go over today's option activity. Listen, I will always give you my opinions, and of course, this video is for information purposes only, not giving out any advice or recommendations. But so here's my take on. I know people are saying, "Oh, well, we're coming back and we're retesting these lows. Could this hold?" Yeah, but my point is, I don't know. I don't really hang my hat on this analysis because it all depends on what you own. If you're just trading the indices, then that's fine. Then this is a decent comparison for you. But if you're trading stocks, like I know most people are trading single stocks, uh, depending on what you own, right? Apple is through the February lows. Amazon is went through the February lows today. Facebook has gone through the February lows, right? So, where are you going to hang your hat on in Facebook? That we're retesting you can't say that. It's already taken out the lows. Do you see? So I hope, like my point making this, let me look at Salesforce. Did it hold the February lows? No. So, magically, is the S&P going to somehow stop here? I just find that hard to believe, right? So keep in mind, it's 500 names in the S&P. There's all different types of groups of stocks. For example, J&J is a lot different. It's completely moving different than what Salesforce or a Facebook is doing. Now, I do see some reversal bars. I did not short any of this stuff today, but I don't know. Maybe that's a mistake for me not to get aggressive and short this. But Coca-Cola, which I've been jumping up and down about, what a move this has been making, that's a reversal bar. Like that's something that you could possibly sell into. So I'm just not over trading right now. I'm just really being selective. Same thing with Pepsi. That's a reversal bar. Let's see what Procter did. So, if you manage to catch this move, and I talked about this in last night's video, if you manage to catch this move in some of the defensives, great, awesome job, very nice. But I said yesterday that I'm not going to chase any more of these, or not traffic in many more of these names because I think the move is. I don't want to own these stocks up here. It looks like Procter & Gamble's also, that's a pretty heavy reversal bar. The one area that I was looking at in the defensives was utilities, and they did not close. They closed down 40 basis points. So even with this market, sometimes when everything is down, which pretty much everything I think finished down on the day, there wasn't one green sector. The home builders, the semis, they were flirting with positive all day today. And nothing. I don't see any sector closing in green today. So not much. And basically, even though you'll have some areas outperform one another, like utilities obviously outperformed, oil and gas stocks today, it's a relative basis. Days like this, where everything gets hit, you can't really hide in the defensives. You'll lose a little bit less money if you're not doing a pair trade. For that relationship. All right, so a few different concepts there. So what do we want? Let's talk about the Qs next. I mean, the Qs also, that would have actually made my point a little bit easier, but the Qs have gone through the February lows. So I'm just not going to hang my hat. I've seen this analysis a lot from people, and I'm always fine to to kind of say, I just don't agree with that. Unless you're just trading the S&P, if you're just trading the index, then that's a different story. But if you're trading single stocks, oh, they're talking about SPLV on, that's another one on CNBC as I tape this. But SPLV has been I would call it another hiding spot right now. I mean, even that was down 1.1% today because it's got a lot of names like that, the Coca-Cola and so forth. But, I've been all over this the last couple of weeks with that. But I think the trade has run its course. Now we'll see what else. So do I have something right now that I could say, boom, I would love to get into? No, I mean, I think you just gotta pick your spots. I did more day trading than normal today. I thought that we were pretty washed out in the morning, so I did try some things. Some things worked, some things didn't. PayPal I tried. Let's see where PayPal finished because I dumped my calls once they went back to my cost basis. Yeah, I mean, I got a little bit of a bounce, obviously. This NVIDIA, Citron talking about NVIDIA, so beaten up NVIDIA that it gave a huge bounce to it. I think this bounce that happened, right around when Citron tweeted that out, I think it was a pretty decent short covering rally. I considering that there was not any follow through throughout the day. If you want to look at the diamonds too, the diamonds finished right around the lows of the day. So I think this was a little bit of short covering. When there's going to be headlines, just like if there's going to be another trade headline, shorts are going to cover very quick. And I don't think it's not a sustained. We're not getting sustained bounces because it's not new investment that's coming in. It's just people who are short who are like, oh my God, I don't want to be short. So let me go ahead and buy back my shorts, and then I'll kind of see what happens, and then I'll put my shorts back in place. Reassert those shorts. I think that's what we have right now on headlines, and what we had last week on headlines. A couple trade headlines, we bounce like crazy for an hour, and then we run out of steam, and then the shorts come back in. So that's the market that we're living in right now. Let me look at. Let's look at diamonds. Let's look at the daily chart, and then let's look at IWM. I tried trading IWM as well today, which that one did not work. And then I'll go over today's option activity. But same thing with the diamonds. Diamonds were holding up very well up until 2 weeks ago, and then have just gotten absolutely run over. So yeah, a little bit of support in here as well, if you want to go off of that. IWM, a lot of these things, by the way, I talked about this in my my weekend newsletter, that I was saying watch the MACD because this is now turned over for the MACD. So that's now a bearish cross that you're seeing. I saw that today in IWM as well. I don't know if that crossed over, just about crossover. So you got to be really careful of this. This is showing a sell signal. So I will try to continue to day trade more. That seems to be working better for me right now. Swing trades, I put on a swing trade in BABA the other day. I'll go over the BABA chart because I talked about the BABA long, so I want to talk about when something doesn't work. But you've got a VPOC down here at 136 and change for IWM. So I would be mindful of this tomorrow. Just to kind of go around the world, what's also bothering me is the VIX. It is not going high enough. With the market gapping lower, we only went up to a 23 VIX. So this, to me, somebody asked me in the room, in the trading room today, they said, well, what are you looking for in the VIX? So, well, I would think that we should be back to, if you're going to be in that camp of, the October low is going to hold in the S&P, notice that the VIX is not even there yet. And it looks like this is also firing off a buy signal. So these are not, sorry, I hate to give a negative video, I feel like, again, but I would rather try to read the stuff objectively and say, capital preservation right now. Because again, these are things not to really be messed with. I could show you the last time that we had this crossover, which looks kind of similar. This one's happening more in positive territory. Look at what the VIX did. So you could kind of see we went from a 17 up to a 24. But it astounds me that there is not more panic going on right now, considering the type of moves that we're getting. I mean, the Qs, what they did bounce from the lows, right? They did not close on the lows, down 1.8%, and there's no, it's like a normal move, which I think that's greater than a normal move. We can look at what this looks like too. This is the VIX for the Qs, not really looking much better, other than a red candle for the day. Where I would watch, so that's the negative. Also, crude. Let's talk about crude for a minute. My take on crude. There's not a big correlation. So again, I like to try to refute these things. Yes, oil and the S&P, they generally do not have a big correlation together over time. However, when the volatility starts to move up in either the dollar, crude, and another, name any other commodity, maybe not any other commodity, but in a handful of other areas in the market, when these start to move like this, there is ripple effects that happen. And to me, right now, this is with what's happening in crude is showing a pretty. Of course, it has a lot of supply, and every time we see one of these API reports or Department of the DOE report, there's a lot of supply, but I think also it's a demand issue as well, and maybe there's something going on with demand, and if oil is not being demanded, it kind of hints us at a slowdown. I don't know if anybody tracks the Baltic Index as well, the Baltic Dry Index. By the way, big put print today, big sell in XLC that we were talking about, 740,000 shares sold. That is the new communications ETF where, what's in this thing now? Netflix is in this thing. Facebook, Google. Yeah, it's actually Facebook and Google, which did not have bad days, by the way. If you look at what Google did today. Sorry, I go back and forth with positives and negatives, but it's kind of taking a look at everything that's going on. Google actually finished positive today, so this may be a name to watch for tomorrow. It hung in there pretty well, even when the market was giving it back. So this is a name to watch for tomorrow. Maybe some of these names they're getting close. Facebook actually did quite fine today. Was finished up almost 0.75% today. Amazon, stalled out. I'm surprised. I was looking for a move for Amazon to get all the way through the top of value. Could not get past the point of control today, and then just fizzled the rest of the day. I was going to talk about just for a minute the Baltic Dry Index, right, which is a pretty decent measure of global activity. So if you don't like negatives, don't look at this. But this is also, it's getting close to the lows. It is not taking out the lows. Right? So that's why you can kind of look at this with oil and say, what is going on with oil? And I think it puts us, so it's still, this uptrend is broken. Right? I don't have a line drawn, but you could basically draw a line somewhere in here. This is the support from March of this year. Again, Baltic Dry Index. Again, good to look at as just an indicator of what the global economy is doing. So today's option activity, I will tell you what was really interesting to me was Western Digital. I took this trade. I went into some December calls. I unwound the December calls and I put on some January calls. Why did I stay in this trade overnight, which is kind of a recipe for disaster holding longs right now? Because I think if you look at the PE, it's a 4. And I know I'm not a major fundamental guy, but they went after this name a couple times today. And I think some stocks are getting close. Other stocks may not be done going down. Like, look at this Applied Materials. It's showing signs of life. So 32, you could maybe try a long there as a counter trend trade. Me personally, I want to limit the amount of counter. Everything seems to be a counter trend trade. Oh, let me talk about BABA. Speaking of counter trend trade, that did not work. So this, I think I held this one day too long and then it gapped down. I'm kind of stuck in some February calls. I'll look for a bounce to maybe get out of this, but this is not what I was looking for. So if you followed me in this trade, we had one inside day. I was hoping that this trend line would, this kind of reverse head and shoulders, possible reverse head and shoulders, with this line would hold, and it basically sold off right at the end of the day, which I talked about in yesterday's video. So I did not get a chance to sell it, and then it gapped down today. So now I'm kind of caught in this trade. So I will try to get out of this if we get some type of a bounce, but this is not what I wanted to happen. So like I said, I'm stuck in this one for now. That's BABA. Also, talking about Applied Materials, Western Digital, those have already gone through a fairly good sell-off. Names like Microsoft are just barely holding on to that 200-day moving average. So this may not be done. So again, it depends on the stock. Cisco's another one that's trying to hang on. So these may be the next. If this market cannot hold here, I would say, maybe this group might be, some of these might be going lower too, because every other name has gotten taken out in this. Again, I look at Salesforce, which again, I call it one of the darlings of the bull market. Did manage to come back today, did not finish on the highs, but finished down just fractionally on the day. So another name to watch. They actually have earnings coming up too. So, all right, guys. Well, I'll leave it there. It's a 20-minute video, which is longer than I usually go, but there's been a lot of things to talk about. So, best thing I'm doing is trying as much as possible to sit tight and not redeploy too much capital until I get a definitive signal. Something that I really, really like, and it kind of hits me in the face to say, hey, the bottom is in. And what I see with the VIX and oil, a couple MACD bearish crossovers in the indices, tells me just to kind of sit tight for the most part and hang in there and fight for another day. All right, so I'll leave it there. Have a great night, everybody.